Welcome to the model of ninth wave. Superior inventions for financial markets using 369 forecasting research and development.
Hello, welcome back. In this quick discussion, we are talking about intermarket buying and selling opportunities. We are looking at ES, NQ, YM. We have not added Russell. So these are futures. So what happens is not every moment in time we have these markets in collaboration, which means they get out of sync, which means we have some potential to play these inter-market divergences. This is a little bit of next stage of trading. We have algos which do all this, not in retail space, but the ideas are pretty straightforward. They are This concept is applied across multiple intermarket instruments and also applied inside the same group by going across different time frames. So 6 months out contract versus 1 month out contract. When they reach a certain stage of balance point or edge, we make these trades. So it is same as saying going long the front month and going short the outdated months. Or it could be reverse. We put a bias pairs trading. Same thing can be done here. We are not going to discuss how to establish that, but we are going to discuss the possibility, which you can investigate further. So going back to our screens, let's take some sample. We can pick any time frame, doesn't matter. They're all 30 minutes. First of all, if you notice, this has to happen on a similar time frame analysis. So what we are looking for is if one market is stronger and other one is weaker, we can long one market and short another market. Now you need to know proper hedges ratios to trade, otherwise you will end up losing money anyways. This is for people who are a little bit into the market for a while and they're looking for some bigger volume trading with some extra edge. So this could be one of that. Now if you look at the market, right? So let's compare the pivots to pivots. As my role, if I look at this pivot location and this pivot location, and if you watch my multi-cursor across the screen, they all made higher high. So markets are in sync. They all made higher high. Markets are in sync. Okay. So there's no bias here. Let's move forward. Same thing here. We compare this pivot to this pivot. They all made higher high. So no edge either. Okay. Now let's a little bit compress this a little bit so we can see more of real estate here. Now let's compare this one and this one. They all made higher high. Pivots are same higher high. So there's still no edge. Okay. I'm just doing this real time. So hopefully I'll find some. Now these don't set up every day. That's the thing. That's why I said in my opening statement, this is for situations where you want to trade heavy, but you need a bias and little bit of hedging. This is just one of those hedging scenarios. Okay, so let's compare this and this. Now, if you let me just mark it, right? So it'll be easier. I'll compare this area and compare this area. This is right. Now you will see clearly what I'm talking about. So I'm not going to get in trouble by saying do this or do that. I'm just going to give you an idea of how the structures are set up. All right, so we found an area here. So if you observe this pivot with this pivot, they're pretty much doing a double top retest inside our zone, retesting the zone. Discussion is not the zone. Discussion is pivot to pivot. Now, if you same area, if you compare this pivot, well, let me just draw that one now. So this pivot to pivot is going, oops, wrong one. So here we can say retest or a little bit of weakness. Let me just make it little super fat here for the sake of discussion. And let me maybe change the color. User default. All right. So we don't have any confusion. So this one looks like you can say if you just remove the wicks, so it retest a little weakness here. And if you compare this one, look at this one. And if you compare the NQ with the ES, NQ went much higher. And if you look at the situation on YM, so YM and ES, they have same philosophy unfolding at this moment in time. I hope you can see that. So if I ask you the question, which market is out of sync, the question is pretty simple. And it is pretty evident with what I am displaying which market is out of sync. NQ is. It made it higher high. Other ones did not make higher highs. So two markets are showing weakness. One is showing strength. If you want to short a market, which one is suitable to short? I hope you get my hint here, what I'm trying to say. All right, so we found a situation. And you think about it, what are you going to do? When you face this situation, are you going to short the weak market, or are you going to short the strength market, or are you going to short the market which will attempt to get in sync with the other markets? Remember, we haven't added Russell here yet. But you understand what I'm exactly trying to say. And all of them went to our suggestive algo boxes. This one, and this one. So if I ask you to make it long one and short one market and long one market with the proper hedged ratios, which will it be? All right. Let's go forward. Maybe we should go back but find some more. All right, so here, let's look at this. It made a lower low and lower low and lower low on ES. It made a lower low, a lower low, lower low on YM. So, and what happened here? We're expecting it should be lower low, but it is not. If it is low, and this one is also not lower low. So, the question comes again. we see intermarket divergence. It happens once in a while. It doesn't happen every day. So, what to do? ES and YM are shaping correctly. This guy is showing strength. This guy is showing strength. Question. You want to take a trade. Which market will you short? Which market will you go long with the right ratio? If you're trading heavy. I hope you understand where we are going with this. Are you going to play the weaker market to catch up with the strength, or are you going to buy the strength and sell the weakness? Or if you want to go long, which market is showing strength? So that's the question of hedging trading. There's a reason they are called hedge funds. This is the reason we do hedging, right? So, all right. And you can mark this on your charts and think. This is thinking man's game. As you guys know, you guys are great thinkers. I appreciate your visitations. All right. So let's going on here. Everything is in up and up and up and up. I don't see any challenges so far. Okay, everything made higher high. See that you will not find those divergences that easy, especially when you play in the same instrument, especially getting in the bond market or crude oil market or beans or energy markets like various natural gas markets. So one against the another in the same instrument but across the time zone. They're very profitable opportunities, but they don't happen often. I'm just showing you uh, their behavior, right? But I'm showing you on an intermarket analysis. That is something we do some coaching when we teach our professionals to trade certain ways, because hedge fund is hedging, right? All right. So we haven't. Okay, now let's go back to what we were doing. Let's not lose focus. Are we back into where we were? No. So let's keep on going. Keep on going. Okay. Tick tick. Wow, look at this one. Look at this. YM and NQ. Let me get rid of these lines. All right. So here, you can always zigzag, add a zigzag to it just to locate a pivot, because that is mathematically correct approach to finding pivot. It doesn't matter, but we can just see it, right? So when this is happening, I need very strong divergence. So now if you compare this pivot to this pivot, so let's mark it. So here, ES and NQ are in the same shape moving down. But look at this. Look at this guy. Right? Look at YM. So YM got out of sync. So which one is stronger? Which one is weaker? So you can see when this happens, you have opportunity because there's a divergence, intermarket divergence. So if you want to just go long one thing, will you go long weak instrument or a strong instrument? If you think logically first, before you get into hedging approaches, you should think about it. Which one are you going to go long? Which one are you going to short when you see divergence, right? So strength is here. Does it make sense to go long this one? I would think so, personally. Can I do some hedges where I have a bias of my trade in YM, but I'm using stop loss in other instruments? And that's the whole idea of hedging is. Okay, same thing. Now, if you compare the next one, so I hope you got the idea what's going on here, and I'm hoping that you'll find a way you can profit from this if you are trading futures. Now, futures will also tie up with QQQ and SPY as well. So here you can see NQ and sorry, NQ made lower low, but ES and YM did not. The question always becomes, are you expecting the NQ to catch up with the other market, or you're better off if you're going long, go long the strength. All right. So okay, so I think you got the idea very clearly where we are, what we are suggesting. Now if you can see these, all these things now are making the same double bottom, no edge, no hedging edge. The other kinds of trading which we always post it anyways. So here lower low, no problem, no problems, no issues, no hedge, lower low on the top, lower low. There's no hedge. We need a very clear divergence. There's no divergence yet found here. Higher. We have higher here. All of them, no divergence. And here, higher, no divergence, right? So market don't get out of sync every day. So when they do, you have a profitable edge. Now here, they are doing same thing, higher high. Okay. So let's look at the recent data. So what do we have here? Okay, so again, okay, we have something going on here. So, but if you look at this, YM made double top, ES made double top, YM made double top, and what happened to NQ? NQ is showing extreme weakness. And now, if you want to short something, you should short the weakness. Now, if we add our oscillator here, we can see if there's any opportunity to short. So it is not on the bottom side, it's on the top or higher side, it's around 63, 64. And here is where you can enter your short. Stop loss is on the top based on our trade locations. So various approaches to trading based on your trading style and who you are and what you are able to handle. And you need to first cultivate who you are, especially with trading futures, and how you can handle it. I do mostly hedge trading. This is one of the strategy, and there are also various other strategies of hedging. They're all tactical trading once you know how you want to trade. Thank you.